The automotive world just got rocked. Jeep and Ram have dropped a bombshell, slashing prices by a jaw-dropping 50% across several popular models. This isn't a seasonal rebate or a dealer-only promotion. It's a massive company-wide reset that has shoppers and competitors scrambling to make sense of the move. Why would two of America's most recognizable truck and SUV brands suddenly gut their own sticker prices? Industry insiders point to a perfect storm. Inventories have been piling up on dealer lots. Consumer demand for high-priced vehicles has cooled under rising interest rates, and fierce competition from Ford, GM, and a flood of new EV options has made full-size trucks and rugged SUVs a harder sell at premium prices. By cutting prices in half, Jeep and Ram are trying to jolt buyers back into showrooms and keep factories humming before unsold inventory starts costing them even more. For buyers, the temptation is obvious. A Ram 1500 or a Jeep Grand Cherokee that once felt out of reach is suddenly thousands, sometimes tens of thousands, of dollars cheaper. But should you jump in? The deal is undeniably attractive, yet questions linger. Are these vehicles being cleared out for an all-new generation that will make today's models look outdated overnight? Will resale values tumble because the market now knows these trucks were fire-sold at half price? And what about long-term ownership costs if the company is slashing margins? Will service, warranties, or parts support suffer down the line? Smart shoppers are running the numbers carefully, weighing the once-in-a-decade savings against the potential hit to long-term value. From the company's perspective, this is a risky but calculated gamble. Slashing prices could boost short-term sales and capture market share, but it also threatens brand perception. Jeep and Ram have built their reputations on rugged capability and premium positioning. A sudden race to the bottom can signal distress to investors and damage the sense of exclusivity that keeps loyal owners coming back. Profit margins will take an immediate hit, and Wall Street is already eyeing the quarterly earnings reports with skepticism. If the gamble pays off, it could reset the competitive landscape and force rivals into their own discount war. If it fails, it could erode billions in brand equity and leave Stellantis, the parent company, scrambling for a new strategy just as the EV transition accelerates. And this bold pricing move doesn't happen in a vacuum. It sends shockwaves through the entire auto industry. Dealers from coast to coast are already reporting a surge of curious shoppers, and rival brands are calling emergency meetings to figure out how to respond. Ford dealers are quietly warning headquarters that F-150 buyers are walking across the street to Ram lots. GM sales managers are worried that Silverado discounts won't look nearly as enticing next to a 50% price slash. Even Toyota and Nissan, usually insulated by loyal customer bases, are watching their truck traffic dip as headlines about Jeep and Ram dominate car forums and social media feeds. The ripple effect is undeniable. When one major player cuts prices this aggressively, it pressures everyone else to either match the deal or risk losing market share overnight. Behind the scenes, analysts say Stellantis might be using this shock strategy to clear the decks for a massive product pivot. Rumors are swirling that next-generation electric Rams and hybrid Jeeps are closer to launch than expected, and that these steep discounts are designed to liquidate current inventory before those new models hit showrooms. If true, the company isn't just chasing short-term sales. It's positioning itself for a faster EV rollout while starving competitors of their most profitable truck and SUV buyers. That could explain why executives seem willing to take the hit now. Better to sacrifice margin today than be stuck with outdated gas-powered stock when the next wave of regulations and consumer preferences kicks in. Financial markets, however, are split. Some investors see a bold move to stay ahead of a changing industry. Others view it as a red flag that demand for traditional pickups and SUVs is collapsing faster than anyone expected. Credit agencies will be watching how the cash flow balances out in the next 2 quarters, and any stumble in earnings could spook lenders or slow down future product development. Meanwhile, suppliers, from steel producers to parts manufacturers, are bracing for a potential price squeeze if Stellantis tries to recoup losses by negotiating harder on component costs. And for everyday buyers, the psychological impact is huge. Shoppers who were waiting for the right time suddenly feel that time is now. But those who already bought at full price are frustrated and vocal, flooding forums with complaints about immediate depreciation. Dealers are caught between celebration and chaos, struggling to handle the rush while explaining to recent customers why last month's $60,000 truck is now being advertised for barely over $30,000. The tension is palpable on the showroom floor, and it's only intensifying as word of the discount spreads beyond traditional truck buyers. Families who never considered a full-size pickup are suddenly doing the math, realizing they can buy a Ram 1500 for the price of a compact crossover. Off-road enthusiasts who dreamed of a Wrangler Rubicon are showing up at dealerships with cash in hand. Rental companies and small businesses are lining up fleet orders, knowing they may never see factory-fresh vehicles at these prices again. The sudden demand is creating a frenzy. Some dealerships report lines of customers before opening, while online order systems are buckling under traffic. This surge, however, introduces new challenges. Inventory managers are scrambling to match the supply with the unexpected spike in demand, and logistics teams are expediting shipments from factories to keep lots stocked. If the buying rush outpaces production, Stellantis could swing from oversupply to shortage in a matter of weeks. That would turn the 50% slash from a controlled strategy into a chaotic tug-of-war between dealers fighting for every unit they can get. And if shortages occur, customers who thought they had locked in a deal may face delays or see popular trims sell out entirely, breeding frustration that could undercut the goodwill the discounts initially created. At the same time, this pricing shock is reshaping consumer expectations. When buyers witness such deep cuts, it sets a new mental benchmark. Paying full price for a truck, even a competitor's, suddenly feels unreasonable. Other automakers may have to deploy aggressive incentives just to keep traffic moving, and that can cascade through the entire market, compressing margins industry-wide. Analysts are already comparing the move to the airline fare wars of the 1990s, when one drastic cut forced everyone else to follow, permanently changing how customers viewed ticket prices. If Jeep and Ram have kicked off a similar race to the bottom in the pickup and SUV world, the long-term consequences could be massive, reshaping pricing power for years to come. Meanwhile, inside Stellantis headquarters, executives are carefully monitoring not just sales numbers but brand perception metrics. They know the rugged, premium image that took decades to build could be diluted if customers begin associating their vehicles with bargain basement deals. Marketing teams are working overtime to frame the discounts as a bold, limited-time opportunity rather than a sign of weakness. But social media chatter is hard to control. Enthusiasts debate whether this is savvy disruption or desperate liquidation, and every post has the power to sway potential buyers. How Stellantis manages that narrative may prove just as critical as the sales spike itself, especially as media outlets dig deeper into Stellantis's long-term motives. Industry journalists are piecing together clues from supplier contracts, battery plant announcements, and regulatory filings, suggesting that this price shock is only the opening move in a larger chess game. Some insiders hint at an accelerated rollout of plug-in hybrid and fully electric models, with prototype sightings already reported near key U.S. testing grounds. If that's the case, the current lineup may simply be the sacrificial pawn. Vehicles priced to move fast so the company can free production lines and capital for the next generation. Meanwhile, dealership networks are adapting in real time. Managers are retraining sales teams to emphasize once-in-a-lifetime savings, while finance offices scramble to process record loan applications. Service departments, too, are bracing for a flood of warranty work over the coming years, because a sudden boom in unit sales means a parallel rise in future maintenance visits. This unexpected volume could stress parts supplies and technician availability, creating bottlenecks that might frustrate new owners if Stellantis doesn't scale its after-sales infrastructure quickly enough. Consumer psychology is shifting as well. Buyers who once viewed Jeep and Ram as aspirational brands are now framing them as attainable daily drivers. That democratization brings both opportunity and risk. It widens the customer base, but threatens the exclusivity that helped command higher margins. If everyone can own a Rubicon or a fully loaded Laramie for half price, will the cachet remain when prices eventually normalize? Market researchers warn that rebuilding a premium image after such deep cuts can take years, sometimes decades, especially if competitors seize the moment to position themselves as the true premium alternative. Even global markets are starting to feel the tremor. European analysts worry that a US price war could spill across the Atlantic, where Jeep and Ram already face fierce competition from low-cost Chinese EV makers. Emerging markets are watching closely too. A steep discount in America can reset expectations in places like Latin America and the Middle East, where pricing power is critical for profitability. One senior auto economist even called this the most consequential pricing experiment since the post-recession stimulus of 2009, predicting that if Stellantis proves a deep cut can ignite demand without collapsing the balance sheet, other global automakers might copy the tactic in their own struggling segments. Picture Volkswagen clearing out aging combustion models before its EV surge, or Toyota using similar slashes to defend hybrid dominance if battery electric competitors close in. Once one company demonstrates that a 50% reduction can be weathered, the precedent could ripple through every major market. Back in the US, the cultural impact is already visible. Truck clubs and Jeep owner forums are buzzing with debates about status and resale. Some longtime enthusiasts worry that their carefully modified rigs will lose value as half-price newcomers flood trails and meetups. Others welcome the influx, seeing it as a chance to grow their communities and attract aftermarket innovation. Parts suppliers and custom shops are eyeing a windfall as thousands of fresh owners look to personalize their bargains with lifts, wheels, and performance upgrades. Financial institutions are also reacting. Lenders are tightening appraisal guidelines, anticipating that trade-in values could fall faster than usual. Insurance actuaries are recalculating risk tables because a sudden swell of high-horsepower trucks in new hands can shift accident statistics. Even municipalities are watching parking and infrastructure needs as bigger vehicles become accessible to a broader slice of the population. For Stellantis leadership, the next few quarters will be a high-wire act. They must convert the surge of new customers into long-term brand loyalists, upsell extended service plans, and launch the next wave of electrified products before the glow of discounts fades. Internally, engineers and planners are already coordinating factory retooling schedules, while marketing strategists brainstorm how to pivot messaging from historic savings to future-ready innovation without losing momentum. And as whispers grow about upcoming unveilings, rumored all-electric Rams with towing specs that rival today's V8s, Jeep concepts promising trail capability with zero tailpipe emissions. The question hanging over the industry is whether this price revolution is merely a clearance sale or the opening shot of a sweeping transformation that will redefine what American trucks and SUVs represent. The answer will begin to emerge as quarterly earnings roll in and real numbers replace speculation. Analysts will scrutinize every line item, revenue per vehicle, margin compression, fleet versus retail mix, to see whether the gamble produced sustainable growth or a one-time sales spike. If unit volumes soar while profit per unit plunges, Stellantis will need to prove that the lifetime value of these new customers, service, accessories, brand loyalty, makes up the difference. Competitors are already gaming out their counterattacks. Expect Ford to sweeten F-150 incentives and GM to quietly float bigger Silverado rebates, at least in key truck markets like Texas and the Midwest. Toyota may leverage its reputation for long-term reliability to justify holding price, while sprinkling in limited-time financing deals to keep buyers from defecting. If even one rival blinks and matches Stellantis' aggressive pricing, a full-blown price war could ignite, reshaping the profit structure of the entire North American pickup and SUV segment for years. Meanwhile, regulatory agencies are watching with their own concerns. A sudden surge in heavy truck sales raises questions about emissions targets and fleet average fuel economy. State governments that rely on vehicle tax revenue might see short-term gains from higher registrations, but they also worry about long-term infrastructure wear from an expanded population of large, road-hungry vehicles. Inside Stellantis, the next strategic moves will reveal whether this was a desperate clearance or a masterclass in disruption. Will they pivot immediately to unveil the much-rumored electric Ram and next-gen hybrid Jeep lineup, signaling a forward-looking reinvention? Or will they double down on aggressive gasoline-powered sales to milk the current craze a little longer? Suppliers, dealers, and investors are all pressing for clarity, but executives remain tight-lipped, hinting only that A new era for Jeep and Ram is just beginning. For consumers, the decision window is narrowing. Dealers report that certain trims, particularly high-demand off-road packages and luxury interiors, are already selling out, with waitlists forming in some regions. Shoppers who hesitate may find that the most desirable configurations disappear first, leaving only base models or odd color combinations. Yet others speculate that if sales momentum slows, even deeper discounts or bonus incentives could appear, adding another layer of complexity to the buy now or wait and see dilemma. And as autumn approaches, industry chatter suggests that Stellantis's next reveal, rumored to involve a nationwide EV rollout strategy and potentially even bolder financing offers, could arrive sooner than anyone expects, creating another jolt just as the market is catching its breath, keeping competitors and consumers alike on edge. Auto journalists are circling every Stellantis media event, ready to dissect even the smallest announcement for signs of what's next. A sudden update to factory schedules, a mysterious press invite, or an unexpected trademark filing could ignite another wave of speculation and keep the spotlight fixed on Jeep and Ram. Behind the scenes, marketing teams are engineering a second phase of the campaign. Expect nationwide test drive tours, limited edition trims with exclusive badges, and social media challenges designed to turn new owners into brand ambassadors. If they succeed, the initial discount will evolve from a one-time shock into a grassroots movement that keeps dealerships busy well beyond the first surge. Accessories divisions are preparing too, quietly increasing production of bed covers, lift kits, and branded gear to capitalize on a swelling customer base eager to personalize their bargain trucks. Economic ripple effects are now touching adjacent industries. Construction companies, landscaping crews, and small delivery services are pouncing on the chance to refresh fleets at half the cost, which in turn boosts demand for aftermarket equipment, trailers, toolboxes, and heavy-duty tires. Local mechanics anticipate a steady pipeline of work as thousands of new trucks hit the road, while fuel retailers project a bump in sales thanks to the sudden influx of thirsty V6 and V8 engines. Investor calls hint that Stellantis will use the momentum to showcase its upcoming electrified platforms sooner than planned. Insiders whisper about an early debut of the all-electric Ram Rev and next-generation plug-in Jeep models, possibly paired with aggressive lease terms to lure buyers who just joined the brand at fire sale prices. That dual strategy, move the old metal fast while teasing the future, could position Stellantis as both a value leader and an innovation driver, a rare balancing act if they can pull it off. Yet questions of sustainability loom large. Can a company maintain brand prestige when half the neighborhood suddenly owns a vehicle once marketed as a premium statement? Will customers who bought during the frenzy stay loyal when normal pricing returns? Market historians point to similar flashpoints in other industries where deep discounts built a surge but eroded long-term cachet. How Stellantis manages that delicate transition will shape Jeep and Ram's reputation for the next decade, and the next clue to their plan could drop at any moment as dealers quietly prepare for the critical winter selling season, when holiday promotions and year-end clearances traditionally pull in the last big wave of buyers. This time, however, dealers are bracing for something far more volatile. If Stellantis layers additional incentives on top of the 50% cuts, extra cashback, 0% financing, or loyalty bonuses, the market could lurch again, forcing rivals to react before their own quarterly numbers are finalized. Sales managers are already working late, revising forecasts almost nightly as fresh rumors about deeper discounts ripple through the trade networks. In corporate boardrooms, the debate is intensifying. Some executives reportedly want to lock in the gains by announcing a firm end date for the price slash, creating urgency and protecting margins. Others argue that extending the program, even at thinner profit, could cement a massive increase in market share just as competitors are still retooling their EV strategies. That internal tug-of-war will determine how long buyers can expect deals this aggressive, and Wall Street analysts are watching every leak for clues. Meanwhile, supply chains are tightening under the strain. Steel suppliers and Tier 1 component makers are juggling sudden spikes in demand, trying to avoid the bottlenecks that plagued the industry during the pandemic. Logistics teams are chartering extra railcars and trucks to keep dealer lots stocked, while ports on both coasts report heavier traffic tied directly to Stellantis shipments. Any hiccup, weather delays, labor actions, or a shortage of critical chips could send wait times soaring and risk souring the buying frenzy. For customers, the atmosphere is a mix of excitement and anxiety. Some shoppers camp overnight to claim the best configurations, while others worry that waiting even a week might mean missing out entirely. Social media feeds overflow with real-time updates on which trims have sold out, in which states, turning the hunt for a discounted Jeep or Ram into something that feels more like a limited sneaker drop than a typical car purchase. And as January auto shows draw near, speculation grows that Stellantis will use the global spotlight to unveil its next act, perhaps the long-anticipated electric Ram pickup or a radical Jeep concept, cementing the narrative that today's deep cuts were never desperation, but a calculated setup for a sweeping transformation of the American truck market that is only beginning to reveal its full scale, with whispers of even bolder announcements timed for the Detroit Auto Show. Industry insiders claim Stellantis has quietly reserved prime floor space for a historic reveal, fueling theories that a production-ready all-electric Ram or a next-generation plug-in Wrangler could make a surprise debut. If true, it would confirm what many analysts have suspected all along. The 50% price slash was not just a clearance tactic, but the opening move in a long-term pivot toward electrification and advanced tech. Dealers are already preparing marketing campaigns built around that possibility. Some are crafting Future of Power events, inviting customers who bought during the discount wave back for exclusive previews of upcoming EVs and hybrids. The goal is clear: turn one-time bargain hunters into lifelong Stellantis customers, ready to trade up when the next generation hits. Accessory and aftermarket companies are also aligning with this strategy, developing modular charging solutions and EV-friendly off-road gear that could ride the same surge of enthusiasm. Financial analysts, meanwhile, are sharpening their pencils for the next earnings call. They'll want hard data on unit margins, repeat customer metrics, and the balance of fleet versus retail sales. A strong showing could silence critics who view the discount as reckless, proving that an aggressive short-term sacrifice can create a lucrative customer pipeline. But any stumble, especially if operating costs spike from supply chain stress, will give skeptics new ammunition. Consumer behavior is evolving in real time. Surveys show that shoppers who never considered an EV are suddenly open to it if the same kind of dramatic pricing appears in the electric segment. That's a signal Stellantis can't ignore. The company now has a template for sparking mass adoption of future tech if it's willing to repeat the bold price play. All eyes turn toward late winter production schedules and early spring dealer allocations, where the first signs of Stellantis' next move will surface. Whether it's an all-electric Ram, a hybrid Jeep lineup, or an even more radical pricing experiment, the industry is bracing for another seismic jolt, one that could permanently rewrite the rules of how American trucks and SUVs are built, marketed, and sold. And the countdown to that next jolt has already started. Supplier briefings leaked to the trade press hint that Stellantis has accelerated tooling changes at key North American plants, an unmistakable signal that something new is entering the production pipeline months ahead of schedule. Parts vendors are being asked to ramp deliveries for high-voltage components and lightweight body materials, reinforcing the theory that a wave of electrified models is imminent. In dealer showrooms, the atmosphere is electric, literally and figuratively. Sales managers report that customers are peppering them with questions about charging infrastructure, home charger installation costs, and government incentives, even while they finalize purchases on heavily discounted gas models. It's as if the bargain rush has become a bridge to the future, warming mainstream truck buyers to the idea of plugging in without Stellantis having to spend a dime on persuasion. Meanwhile, competitors are quietly lobbying Washington and state regulators for clarity on upcoming emissions credits, worried that Stellantis' aggressive pricing could skew fleet average calculations and tilt incentive programs. Some insiders fear that if Stellantis captures a massive share of the remaining combustion market while simultaneously launching EVs, it could dominate both sides of the equation, locking in market share and emissions credits in one stroke. Investors remain divided. Bullish analysts argue that Stellantis is executing a master plan. Use short-term discounts to flood the market, then convert that customer base to EVs under the same badges. Skeptics counter that the razor-thin margins could strain R&D budgets just as the industry enters its most capital-intensive phase in decades. The next quarterly call will be a high-stakes showdown where every word from the CFO will be parsed like a courtroom testimony. On the consumer side, the frenzy shows no sign of fading. Online forums track which trims are still available like stock traders following hot tickers. Video creators post real-time dealership walkthroughs that rack up millions of views overnight, adding more fuel to the hype. Each viral clip sends another wave of buyers racing to local lots, keeping the cycle alive. And as spring auto shows loom, murmurs grow louder that Stellantis might not stop with one headline-grabbing EV. Rumor mills point to an entire lineup refresh: new drivetrains, updated interiors, and advanced driver assist tech, poised to be unveiled in rapid succession. If those whispers prove true, the current price shock may be remembered not as an isolated event, but as the spark that triggered a wholesale reinvention of two of America's most iconic brands. Jeep and Ram's 50% price slash has already reshaped the truck and SUV market, but the bigger story is what comes next. By flooding the roads with discounted models, Stellantis has captured a massive new audience and set the stage for whatever breakthrough it plans to reveal, whether that's next-generation EVs, advanced hybrids, or a full-scale rebranding. This was never just about clearing lots. It was a calculated strike that forced every competitor to rethink pricing, incentives, and how they define value in a rapidly changing auto landscape. For buyers, the window of opportunity is still open, but it won't stay that way forever. Dealers are warning that popular trims are disappearing fast, and once the next wave of electrified products arrives, prices are likely to climb again. Anyone considering a Jeep or Ram now faces a simple choice: act while the deals remain historic, or risk watching them vanish along with the last gas-powered stock. Either way, the message is clear: the era of predictable truck pricing is over. And for the industry as a whole, Stellantis's bold gamble will be studied for years. Whether it becomes a textbook example of market disruption or a cautionary tale of margin erosion will depend on how well the company converts this surge into long-term loyalty. One thing is certain: Jeep and Ram have turned a routine sales slump into one of the most talked-about moments in automotive history, and every rival brand is watching, waiting, and wondering how to respond.